Hello and a very warm welcome to the brand new edition of Policy Watch. I'm Kriti Mishra. Today we'll take a closer look at government's decision to widen the startup definition. The government has eased rules for startups by announcing a string of exemptions, which includes the important issue of angel tax. An entity shall be considered a startup up to 10 years from its date of incorporation instead of the earlier period of 7 years. The limit for investment that will be exempt from the purview of angel tax has been increased from 10 crore rupees to 25 crore rupees. Currently, India is estimated to have around 30,000 startups. And to know more about the topic, I'm joined by Mr. Ajay, former Secretary, Ministry of Commerce and Industry, Mr. Sunil Garg, taxation expert, and Mr. S.K.Jindal, Chairman, Investment and Capital Markets, ASSOCHAM. Welcome to Rajya Sabha Television, all of you. Mr. Dua, let me commence the show with you. Now, government has redefined startups to further propel young companies. Now, what qualifies as a startup for availing the benefits unveiled by the government?
As you, Kriti, mentioned in your introductory statement, as the government has redefined it in the context of the angel tax and the other provisions of the Income Tax Act which were applicable to them. From day before, the final notification by the CBDT has yet to be issued, but the press note of the ministry and the press conference which the minister and the secretary held, as per that, a startup is one which has a turnover of less than 100 crores in any of the preceding 10 years. Preceding 10 years getting counted from the date of incorporation or the date of registration. That's number one criteria. The earlier you could remain a startup for a period of 7 years to avail of the benefits. Now that's been enhanced to 10 years. Third, for purposes of angel tax, about which we're going to be discussing, the limit of investment, including of the promoter, it has been raised to 25 crores, but that is a composite limit, includes, as I said, what is coming from the promoter, his friends, relatives, as well as other investors in that company, except the listed companies. And the listed companies have been given exemption to make an investment of any amount into the startup. And finally, the new set of provisions have specifically stated that the investment coming from NRIs would be exempted. Earlier it was implicit because the applicability of the clause, the section, was only on residents, but it hence excluded specifically the NRIs. And finally, I would say that the requirement of the company, of the startup being a private limited company, that continues. I would think these are, broadly speaking, I may have left out one or two smaller issues in it, but broadly speaking, this is the way now, for purposes of the taxation, CBDT, a startup has been defined.
Absolutely, sir. So those were the salient features. But talking about angel tax now, Mr. Garg, government's decision comes as a huge breather for startups because they were clamoring for respite from angel tax. Firstly, please demystify the concept of angel tax, and how would this move diminish the adverse impact of angel tax on the startup fraternity?
Kriti, let us first understand what is the angel tax and why the name was coined. Okay.
Who's the angel?
What happened? In 2012, the Honorable ex-President of India, Pranab Mukherjee, when he was the Finance Minister, he brought a section 5627B. And the section was brought to curb the menace of money laundering. What was happening in India? A lot of shell companies, they were issuing share at the premium and then selling it back at the discounted prices, and there was a conversion of the black money to white money. This was happening. To curb that practice, a section was introduced, 5627B, basically for the money laundering activity. But when Startup India started in 2015, the department started issuing notices to the startup.
Right.
Because in startup also, you don't have the much assets in the balance sheet, and the valuation is done basically on the discounted cash flow method. That is the future profit that the startup will generate. This is the concept of the startup. Every startup do this. But the department issues notices to the startup that the valuation is not correct, we don't understand this value, and the difference, book value and the share premium you have charged, it is an income under that section 56 to 70. We raised the issue. Then the government came with the notifications, okay, no, we don't want that, we don't want that. Now this 19th February notification has come.
Yes, sir.
They have relaxed certain norms, and one of the norm was for getting the this benefit of 56 to 7B, angel tax. Why angel tax? Because in the startup, angel investors invest the fund. The condition was to get the permission from the interministerial board of group. That was the very difficult situation. And second was the fair market valuation from the merchant banker. In this notification, thankfully, government has removed both the conditions. Now you don't have to go to the IMG.
Right.
Number one. And number two, fair market valuation is not required. As Dua Sahab has said, the condition is that startup till 100 crore, up to 10 years, and 25 crore of investment. But total investment, including the investment of the promoters. But one thing, I couldn't understand the relevance of this section at the moment, because you have Garg now in place, you have Benami property, you have money laundering, and now the 68 provisions are so stringent. Then why you require this provision? We couldn't understand.
So I take it to Mr. Dua.
68 provision which Mr. Garg has so well explained, that I was just going to add.
Yeah.
That refers to any unexplained credits in your account of the startup.
Right.
So you had to explain who the investors are, if the money has come from them, and also whether it was a tax paid money or not. The point being made is that probably earlier there was overzealousness, many provisions to cover the same set of things, particularly Garg. You know, that's the anti-avoidance rules.
Yeah.
The anti-avoidance rules can cover everything under the sun, including, you know, what was being alleged was that now, ever since the notices have started coming, and one estimate is of the 2,500 surveyed startups, 73% of them have received notices, which means almost 17 to 1,800 have received notices. Thereafter, so many notices have come, they have started investing, the startups are being now registered overseas. Singapore and United States have been mentioned on behalf of them. Fact of the matter is that in 2012 itself, after the Vodafone, talked Vodafone case, it has been said that you may register your company anywhere. Vodafone was registered in Netherlands. As long as the underlying assets are in India, you become taxable. All right, that was done retrospectively, whether it was right or wrong, but the government does have powers and it stood the test of court.
And finally, I want to add a point.
Yes, sir.
With the change in the definition of poem, and with the change in the treaty with the Mauritius, and underlying assets are in India, still you are taxable in India.
But sir, one of the concerns that the government has repeatedly raised, that it is important to prevent money laundering, and it is important to ensure that the startups do not receive money or unaccounted money from shell companies for tax evasion.
Yeah, but Kriti, then you have section 68 and the tax rate is 77% now. If you cannot explain the money, source of money, the tax rate is 77%. What else you want? Now you have money laundering, you have Benami Property Act, all the things can be covered in that act also. Why 56(2)(7) again? See, there is no relevance of having this section. Again, overlapping sections are there. But we request the government that if you want to flourish the startup industry, you have to give them level playing field with other countries, Singapore, Mauritius. You have to give the level playing field. Na? Especially for the startup, you are having this section. This is not good.
Right, so now the government has, of course, eased rules.
Yeah.
Now, talking about the process, Mr. Garg, what is the process for seeking exemption from angel tax for the startups?
Now, first of all, you have to get the registration with the DIPP, simple form number 1. Secondly, as I said earlier, that you have to get the permission from the IMG board. Now, this condition has been removed. Simple declaration a startup has to give. He has to declare that I have raised the money up to 25 crore, number one. And number two, I have not invested the money in the circular. Circular has given so many things where you will not invest the money. And basically it is residential house and it is a car,
Yes.
that kind of assets and other investment in other companies. So that the money shouldn't be rooted. It's a genuine provision.
Yeah.
And self-declaration is sufficient now. You declare to the DIPP side. DIPP will send it to the CBDT.
And 45 days away.
No, 45 days condition has been
CBDT
removed.
will still get 45 days.
But CBDT has the power to
Yes.
reject that application
That's
also.
Right. So we'll just talk about riders in just a bit, but trying to get an industry perspective now. Mr. Jindal, what happens to the companies those who've already been slapped with the tax notices? How can the government assuage their concerns?
This we'll have to see. For the last 6 years this question was hanging, and I personally feel that now they have clarified it, they should cover that also. If they haven't covered it, you will have to see the notification in total. If they haven't covered, then those issues continues and they will not let the ease happen of doing startups. So that is also important, that it should cover all those issues from that date, not from today's date. 6 years has passed and they were not able to breathe properly. Now this is a welcome step in right direction. This will make it easy to do business. And startup, as you know, it carries lot of risk. We are talking about innovations. Innovations means lot of risk. It may happen, it may not happen. So those kind of things are tremendous in this and very important. So this needs special handling, not as a normal business, but special handling is required, and innovation is the need of any society, any country, anything. It opens new ideas, new avenues, new horizons. So you can see new employments, etc. later on. So all these things, it requires a great help from the government so that it can happen. If it doesn't happen, then it is not in the interest of economy as a whole, because until and unless you keep finding new ideas, new innovations, the older one may not continue always. So this is a very important need of the society and business.
Absolutely. So it is important, and Mr. Dua, you wanted to pitch in, and I'd also like to understand from you, how would this move impact investment from domestic investors without the apprehension of a tax levy?
I think just to clarify the point which you had asked Mr. Jindal, I think while the notification is yet to be issued,
Yes.
At the press conference itself, I think the CBDT member concerned was present. He has clarified that any notice which has been issued already, we are not withdrawing any notice. The person concerned will have to respond to it, but we would make applicable the new rules which say that the previous 7 years, if they stand for this exemption, would apply to them as well. That means the enhanced limit. So I think, and it's been welcomed by, CS bodies and startups association, etc., saying at least a road path to how these notices would be dealt with, that's been spelt out.
Right.
That's number one. Second, I should mention that all this seems to have received the kind of attention which the sector needed, probably because in the month of January, the a group wrote to the Prime Minister,
Right.
and the Prime Minister referred to it in his speech at the Vibrant Gujarat Summit,
True.
Yeah.
saying this is something which has been brought up, we will have it dealt with. Everybody expected that this will probably come in the interim budget itself. As we all know, it was more than interim, that perhaps that this could have also been covered, but not too late. As long as the retrospective application is there, and these last 7 years issues which are the investments which have come or which are proposed to come, as long as they remain within the 25 crores. I think the investments will certainly get stimulated, to the question which Kriti,
Yes.
which you asked.
Yes, sir.
Domestic investments will certainly. The startup fever, which probably had caught on in 2015-16, had slowed down as per the registration figures itself. In 2016-17, I understand over 1,000 applications were registered, over startups were registered, a number which came down from 1,006 last year to 484, which is half virtually. Part of it, probably the country's environment for investment, etc., and access to institutional fund with the banks as well as the NBFCs getting into problem, but angel tax was also contributing to it. So, it would certainly get stimulated, particularly because all the requirement for to get called a startup is now very simply said, either innovating, R&D, etc.,
Yes.
or capacity to capable of being scaled up. That's all the purpose. When you apply for a registration online, you got to state what business and and what kind of innovation or R&D is your company going to be doing, and is it scalable. So, we presume that everybody will perhaps be able to point out something, and we have great ingenuity in India to answer every question. So, we will qualify with it, that get registered, and the fact that listed companies, and that is a new provision which was not there. So, full
Right.
credit should be given to the government for it.
Yeah.
The listed companies can now invest without any particular limit, as long as they like. It can, because a lot of large companies were finding that capacity utilization wasn't warranting the creation of new capacity for the last 3 or 4 years. So,
Right.
instead of being quiet or sitting with their money, they can look at investing in startups, and there is no limit at all.
Absolutely. So investments would get stimulated.
I think so.
Let me get another industry perspective. in.
Let
Yes.
me
Yes,
add
Mr. Garg.
a
Yes.
point to Mr. Dua. Government has clarified itself in the circular that number one good thing, that even if you have raised the fund earlier and you now declare it self-declaration, we will not ask a question. Secondly, if the notices has already been issued, we will not stop that notices, but we see that no corrective action has been taken by the government. So, these are 2 points, very good step by the government, that at least if you have raised the money earlier in year also, we will not raise a question on that money. This
As
is
long
what-
as it is
and-
25 crores total.
Yeah,
Right.
25
Past
crores.
and future.
Yes.
But for claiming the exemption under section 80 IAC, where you get 3 years full exemption from the Income Tax Act, you have to still go to the interministerial board.
Yes.
So, for startup, this is information, then you have to go to the interministerial board, but for 5627B,
No need.
no need.
So the process would be followed, but there would be no coercive action.
No, that's one. And 56 to
Yes.
the section which was dealing specifically with startups, on that there will be no action. That's
Kriti,
what
as
the
Dua Sahab
government
has
has
said,
said.
there are 2 issues. One, for startup, those startup where notices has been issued, government has not provided any immunity from that notices.
Yeah.
Due process of law will go, but they will not press for the demand of the income
Right.
tax.
Yeah. Right.
But for those, when no notices has been issued, even if you have raised the money, now you declare, self-declare in Form 2, and you will get the immunity from the angel tax.
That's right.
Absolutely.
This is the clarification.
Talking about turnover criteria now, Mr. Jindal.
What has
Yes.
yesterday's notification done, that earlier these rules are not very specific, not very definitive. For example, valuation thing, it was very disturbing and one was not definite about it. Now they have removed the definition, that thing of valuation totally, and the other criterias have become important and they define you will qualify for startup or not. So things have become simpler. Valuation thing is very, very complicated. Not everybody can understand it alone.
Right. So the government is trying to
Yes.
ensure ease of doing business.
Earlier requirement was merchant banker
Yes, sir.
will
Yes.
certify it.
Merchant number.
Yeah, they will certify the valuation.
Valuation. You will
Yes.
have to arrive at the
Now
valuation.
there is no need for a merchant.
But valuation is very subjective issue.
Yes.
you can
Now
challenge.
valuation is not required at all.
You can challenge the valuation anytime. What the department has
Yes.
done, they have challenged the valuation itself. They have challenged the method of valuation, and that is the basic issue of the angel tax.
But
that
now
is
it is
where
not
the
required.
issue was where
Yes.
overpricing, and then so there was a apprehension of the tax.
No doubt,
department.
government has done a good step. First good step towards the
So it's a right step.
Yeah,
Yes,
it's a
it's a
right,
right
step.
step.
But what we say that it is not required at all. You
It's
can
a
open it up
welcome move,
because you have
yes.
you have other provisions to check this menace.
Right, sir.
Yeah,
So it's a welcome move.
it's a welcome move.
Right.
It's a welcome.
What you've
And
done
also-
is delta. Whatever existed, the limits have been
Yeah.
increased.
Yes.
In the same vein, except as I said, one or two large things. listed companies investment, which
Yes.
provision wasn't there. NRIs was
Already-
already there, it's just been
Specifically mentioned now.
stated. And the definition of turnover for a startup being raised from 25 crores to 100 crores.
Absolutely. I'll take that point,
Exemption
sir.
limit going up from 10 crores to 25.
So, turnover criteria, I'll take that point to Mr. Jindal.
Yeah.
So, an entity would be a startup if it doesn't cross revenue of 10 crore in a year. Earlier, the limit was 25 crore. What would be the impact of expansion of turnover criteria on the startup ecosystem?
Now it has become more broader. It will cover more industries. There the limit was too small and they found the need was much more, and it's a welcome step. They should further enhance it according to the need of the people who are engaged into it. So it's a very welcome step. 25 to 100 crore, 4 times they have increased it.
Right.
It's a very good step.
Right. Mr. Tiwari, I'd like to understand from you. How has the entire startup ecosystem evolved in India over the last 3 or 4 years? Because it was announced by Prime Minister in 2015, it was launched in 2016 by Finance Minister Arun Jaitley. How has the startup ecosystem evolved? Because now India is the 3rd largest startup base globally.
I think this was a start which was healthy, robust, because in the first year itself, we found a large number of, second year I should say, it started in 2015-16, but the figures are for the full year 2016-17. As I said, even if 1,000 companies got registered, it was a big thing to start
Right,
off.
absolutely.
Fact of the matter is, in India, we do not take risks, particularly financial. The venture capital business in India is not very big. Though venture capital investment has been exempted from day one. That wasn't brought under the fold of the this section 56(2). But the fact of the matter is that in India, neither do we have so much of startups would have so much of their own money, and then institutional finance wasn't available. I think the institutions were being a bit conservative. Venture capital by itself works on a more like an insurance principle, that we invest in 10 places, we'll make money in 2. And that is good enough for what we have invested in the other 2. Overseas, particularly the United States, which is known as the hub for startups,
Right.
that's the way private equity funds, venture capitals, people who make investments, initially venture capitalists, then even private equity, everybody doesn't expect every project of theirs to do well. So that in some ways was promoting much more, many more startups than we have seen in India. Failure has to be recognized as a part of the process of startup.
Right.
Everybody is
Absolutely.
not going to succeed. Let's accept it, but you do your math, you do your the lending principles, etc., on the basis that, all right, 25% will succeed, they will last up to 5 years. We earlier said 7, that was the definition. So now 7, whether how much will last beyond, etc., those kind of things you need to work out. But the fact that incentive will be available for 10 years now is an encouragement that the tax benefits are there. Venture capitalists, I think, have now we see more both homegrown as well as foreign venture capitalists operating in India. It's just accepting the fact that as long as failure is not fraudulent, on account of anybody's malified action, that every project is going to succeed should not be expected in the case of startup. If that is there, we will see many more people getting into this business.
So absolutely, the ecosystem is evolving and there's encouragement from the government. On that note, thank you so much for joining us. So this announcement will unleash the next wave of entrepreneurship to make India #1 startup nation in the world. That's all we had for you in this edition. Thanks for watching and stay tuned to Rajya Sabha Television.